Good morning. It's Monday, August 27th. This is George Kachuk with Know Your Options Inc. reporting to you from the CME Group trading floor in Chicago. It's Monday morning, so of course the markets are slightly positive, slightly negative, zipping back and forth. But generally speaking, the uptrend continues. The way we make this assertion is, let's go back, take a look what happened last week. Actually, last week was the first week that the NASDAQ and the S&P was down for a number of weeks. We had a large reversal day on Tuesday. However, the uptrend still stays intact. On Tuesday, the NASDAQ touched 3,100. It got into that resistance zone we've often talked about, between about 30.85 to 31.40. If the NASDAQ can break through that, the uptrend may really be solidified. But for now, we have support at the 3,000 level. If that doesn't hold, we'll be looking at 2,950 to 2,900 level. And we had a really nice bounce on Friday, which shows us that this uptrend wants to hold with a lot of leading stocks doing pretty well. The S&P 500, same thing on Tuesday, touched a new high, reversed lower in big volume. So it looked like a pretty ugly distribution day, and it was one. However, the uptrend still holds intact because one day does not change the trend, at least not so far. So again, the S&P held support at the 1,400 level. If it doesn't hold that, we'll be looking to see if it can hold the 1,360 level. And again, on the upside, we're going to see if it can break through the 1422, 1426 level once again. Okay, now the reason we talk about these different market levels, if we're trading equities, we should be looking just at that, equities, and how the price and volume action is going on in these equities. The reason I bring this up is we get a lot of calls from clients with statements like, shouldn't we be shorting the market now? Isn't the market top? And the reason they're telling us this is because the VIX, the CBOE volatility index, is near lows. And it's been at these lows for a while. And so, we hear a lot in the media, market can't sustain with the volatility so low, so the market must top. Sounds like a pretty interesting idea, so we go back and take a look. Historically, is that true or is that not? I mean, what can we use as a precedent to tell us if this is false or positive? Well, I took a chart of the VIX volatility index over the last 20 years and compared it to the S&P 500. Now, if we go back and look from 1995 to about 1997, the VIX was in a range from about 10 to 20, pretty much where it is now, as the market basically tripled in value during this time frame. Same thing you can see in 2004 to about mid-year 2007. The VIX also was very low, stuck between the 10-20 point range, and the market continued higher. So the point of all this is, if you want to trade equities, focus on the equities, not some external indicator because someone told you that that's the signal or that's the top. Now, it's another story if you want to trade the VIX. If you want to trade the VIX, study the VIX. And then I suggest the video prior to mine done last Friday by Frank Fahey of Discover Options does a very good job explaining what the VIX is, what the future VIX are, and what are VIX options. So if you want to trade the VIX, focus on the VIX. But if you want to trade stocks and stock indexes, I'd focus on those. As always, let price and volume be your guide. You see a lot of good action still going on in home builders, tech stocks, biotech stocks. This is George Kachuk with Know Your Options Inc., reporting you from the CME Group trading floor. Have a good trading day.